Hello, this is Alec Papish with NCS Credit here with a pre-election update for credit professionals. As election season quickly approaches, here's what we're going to look out for. First, let's talk about what are we going to see. This is the first time since 1968 when Lyndon B. Johnson was our president that the incumbent president is not running for re-election. There will be a new president, which means there will be new policies that will naturally influence the economy. But there's no need to worry. Any policy will take time to move throughout the House and Senate. We will see it coming, but we may not know how to best position ourselves, at least in the short term. And look, it's 2024. I realize it's impossible to disconnect from the political news cycle, but let's remember, on these subjects, we need to remain objective because that's what credit analysis is. And this is a very important time to be prudent with our credit decisions. New presidents, by nature, love to make a splash by introducing their new policies that will influence and impact their legacy. In fact, the new presidents are encouraged to do so. The first 100 days is a very popular term and is considered to be a benchmark to essentially measure the early success of a new president. This year will be different because we know there will be a new president taking office. So what are these potential changes in policy? Well, there's four major buckets, if you will. The first being corporate taxes, the second being tariffs, third is defense spending and infrastructure investing, and the fourth is ESG or climate. I'm sure we've all heard these topics, whether they're in debates, newspapers, social media, but how do they affect our day-to-day in the credit world? So let's start with corporate taxes. By definition, this is the rate at which companies are going to pay taxes. Depending on which side of the aisle is elected, these could be increased or decreased. It's naturally a concern for all businesses, especially those with narrow margins. However, we have seen companies thrive in both environments. So this will impact businesses, but not as substantially as the other 3 points that are to come. The second are tariffs. These are changes in taxes on imported and exported goods. Definitely a hot topic in the debates this year. These, again, can be increased or decreased, but more importantly, some specific products may be changed more significantly than others depending on the types of good or where they're coming from. So this will have a significant impact on commodity prices, which at NCS, we have many clients that are in the commodity world, also in the raw material supplier world, selling to contractual chains. Third is defense spending and infrastructure investing. By definition, this is the increased spend or reallocation of funds. So this typically increases slowly year after year, but we could see a large reinvestment back into the US, as it has been a very popular topic again amongst debates and US citizens as well. The increase in spending in these categories will correlate with more public-based projects. Do we spend more abroad, focusing on the allies, or do we focus on US infrastructure, hospital, airports, roadways, things that our taxpayer money are going toward? And lastly is ESG, a hot topic, 3 to 4 years ago, not so much anymore, as the topic has turned to more of green energy. So how much more will be invested in this green energy? We saw a huge investment over the last 5 to 10 years in solar with government subsidies, prices reducing, commercial and residential application. But can this be expanded into other alternative renewable energy sources? Are we going to see an increase or a decrease in this investment? Again, depending on who is elected, the change could be significant, but we do know that both candidates do want to do more with this type of energy. So I wish I knew how all of these policies would interact with each other and with the economy. But to be frank, if I knew that, I probably wouldn't be here. I'd be on a private island enjoying the sun because I know exactly how everything would end up. But in all seriousness, these are not going to happen overnight. We will hear and see the policies move throughout the House and Senate. We may not know the long-term impact, but we will be able to react once we know the direction in which these are headed. So let's discuss then. So we know the policies. We know there is going to be new policies with a new president. So what are the economic implications during this period? The shorter answer is nobody knows. We do have some educated guesses, but I can assure you if anyone is planting their flag on guaranteed outcomes, those are just not true. There's too much movement and too much variability in the economy right now. especially because we don't know who is going to be the president. We know interest rates are still high despite the most recent cut. And we also know that consumer staples, housing, and discretionary spending are all still very expensive. But as of right now, there is still so much demand in the economy, and that is a good sign. But what if this changed? What happens if demand slowed? How can credit departments react or be prepared for such a dramatic shift going into 2025 with a new candidate or a new president? During periods of economic uncertainty, the only thing credit departments can truly do to put themselves in the best position is make sure you're securing your projects, your accounts receivable, and your inventory. Utilizing UCC filings for any business to business transaction where your customers have an open line of credit, or if you're in the construction industry, the use of the notice, lien, and bond claim process to ensure you are a secured party in the event of bankruptcy, default, or non-payment. The good news is NCS has your back. No matter what the service, whether it is UCCs, notices, liens, or bond claims, as long as there is a will or a want from you and your credit department, we have the service offering to help you. Call your account representative today and ask NCS for advice. On Monday, October 21st, I'll be at the CRF October Forum expanding on these topics at a breakout session. Look for the title, Financial Stability During an Election Year, or visit ncscredit.com to learn more. Looking forward to seeing you all there.